Hello and welcome to TheoTrade. My name is Doc Severson and this is the Theo Night Report for Thursday, October 13th. I'm actually recording this a couple of hours before the market close, and today we've seen volatility kick up. In fact, this is what we've seen the last 3 days now. So after just incredibly sideways price behavior with very low implied volatility, very low realized volatility, we're starting to see a change in character. And today alone, we've seen a big drop down, and then we're seeing the price fighting back with about 2-3 hours left to go in the cash market today. Now, why all the nervousness? Well, I think a lot of this comes down to the earnings reports, especially with the financials that we're going to see tomorrow. So if we zoom in on Friday over here, we're going to see JP Morgan releases. We're going to see that Wells Fargo releases. We're also going to see Citi release as well as some other stocks there. Those definitely will move the market around based on where they're sitting. So if we cut over to JP Morgan, we can see that the conference call is tomorrow morning before the market opens. So that's 8:30 a.m. Eastern time. So we're going to have all these earnings out on the table by tomorrow morning. So we'll have some kind of read as to how the market is reacting to their performance. Now, I think why these are so important, especially these three, is that this is really the first batch of earnings in the third quarter earnings release here that's starting that really mean anything. And it starts to come fast and furious coming forward. So we've already had 5 straight quarters of declining earnings performance. Might this be the quarter where we start to see that change a little bit? Perhaps. The rumor on the table right now is that fourth quarter is going to be better. But again, that's just a rumor. So everybody's going to be watching very, very carefully with these particular stocks to see if we're going to see the start of a change or whether it's time to palms out, sell out, or whether it's time to go palms out one more time. Now, the issue that I'm seeing as I go over to the S&P 500 futures, so this is the main issue here, is that we still have a strong trend and strong momentum to the upside. Even though it doesn't feel like it, on the monthly chart, that's still a strong trend. Now, what we've seen on the weekly chart is interesting, and I'll break this down a little bit more in a minute, but we've essentially seen, since the Brexit reaction, we've essentially seen no trend whatsoever. It's just been consolidating up here. And for this reason, we have a very high fractal energy reading up here. So what this means is that we have huge potential to move. Okay, huge potential to move. So what does that mean? Are we going to get a big move to the upside or a big move to the downside? Well, we can't tell just yet unless we find our crystal ball, which is somewhere out there. I'm sure someone will sell one to you. But we're more interested in understanding the mechanics of what's going on. Now, this is an important lower high sitting over here. So that's a clue, that's a hint right now that we might want to start seeing price action go to the downside. Now, the other thing that I will mention here is that really since, and this goes back to 2015, since 2015, markets are not buying the highs. They're buying the dips. They're buying the dips. They're buying the dips all the way along here. They're buying the dips. Even on an intraday basis, they're buying the dips, but they are not buying the highs. What does that mean to me? It means that if the market wants to go higher, it's got to go lower first. I know that doesn't make any sense, but if the market wants to go higher, it has to go lower first. It's almost like 1 step back, 2 steps forward. Or maybe even 2 steps back, 3 steps forward. It's almost going to be like that. So let me show you what I'm talking about here. If we look over the last year or so, this is what we've seen where we had a market that refused to buy the highs, and so it had to sell off. And specifically, as we got into this strong move down early this year, back in January and February, all right, we slingshotted higher from there into new highs, all right, or at that time, relative highs, right? Same thing, went right back up to resistance. Then we had the Brexit reaction, okay? 1 step back, 2 steps forward, broke into new highs. And lately, we've had some very muted reactions to the downside. We never really got down to 2100 on the cash index, which I think is important. This is the futures contract here. So what I want to see is the price coming back down into this area again. And I think at least in short term, that dip will be bought. So in some ways, if we do get a bad reaction from the bank earnings, that might create this dip that is bought, and we may ultimately end up a little bit higher from there. But I'm not still sure if the market's going to be buying new highs. It seems like we have an awful lot of reluctance to buy new highs as we get up to 2200. So to be very honest, I really don't care if the market goes higher or lower from here. I mean, some people are bears, some people are bulls. I really don't care. I just want some movement. And probably the best chance for us to get some movement in the short term is if we do see some kind of bad news over the course of the next week or two. Gee, I wonder if that's possible in the month of October in 2016. Very likely, right? So any kind of news that's not already priced in. Guys, it's not going to be anything due to the election, and it's very unlikely to be anything from WikiLeaks or anything else like that. Everybody's already priced all that stuff into the soup. It's going to be some other surprise. It's going to be some other swan coming in from left field that nobody sees coming. All right, so what that might do is provide a little bit. I don't know if we're going to get into lock limit futures like we had here in the Brexit. That would certainly be exciting. But it could push us down back into this range again. And I believe this would be bought on the first pass through. Now, whether that creates a higher high or whether that just creates a lower high is something I don't care about right now. I just want some movement so that we can create some opportunities. I want to see that implied volatility jacked up again. All right, that was the ES or the S&P 500. Let's look at the NASDAQ Composite. The NASDAQ Composite is even worse right now because it's so stretched out into all-time new highs right now. So that is a little bit of a problem, and it's gotten ahead of itself. So a more exaggerated reaction might occur on the NQ. And lastly, we'll finish up here with the Russell futures. Nobody is buying the Russell futures at the highs as well, too. So we have, in effect, a double top up here, and the price is coming down pretty strong today. But again, the day's not over yet. We'll see where this ends. And of course, we will see what happens with bank earnings as well. Now, the Russell has potential to really jump if some of these energy companies start coming in with some more positive earnings. A lot of these small energy companies are located in the Russell 2000 and could really push this thing up very, very quickly from this point. So again, range contraction like this is what we're seeing right now, and we are loaded for bear. All of these charts are ready to move in a big, big way, just like I talked about a couple of days ago. So we're just seeing the very tip of the volatility today and yesterday and Monday. So we'll see whether or not this starts to continue. And I think a big key to this is going to start tomorrow morning with the bank earnings. Are they going to come in ahead of schedule, or is it going to be more of the same from the last 5 quarters? So remember that we might have to take 2 steps back to even make 1 step forward at this point. The highs are not being bought. Thanks for listening, folks. We'll see you with tomorrow's report. Take care.